You are listening to C-Suite Perspectives, a podcast by the Conference Board.
Welcome to C-Suite Perspectives, a signature series by the Conference Board. I'm Steve Odland from the Conference Board and the host of this podcast series. And in today's conversation, we're going to discuss cryptocurrencies. What are they? How do they work? Are they even real? I'm waiting for that one. Joining me today is Hollis Hart, former president of International Franchise Management at Citi and a senior fellow at the Conference Board's Economic Center. Hollis, welcome.
Well, good to be here, Steve.
So Hollis, you're an expert in fintech and crypto and all things financial. But let's just start. Our listeners will run the gamut from people who know a lot to know a little. But let's just start with the basics. What is Bitcoin? When was it created? And how does it work?
Well, Steve, I'm going to back up a little bit. And first of all, I don't know if I'm an expert, but I'm certainly opinionated. Let's start with the concept of money, and I'll really accelerate, I promise. But there are two types in the grossest sense. There's fiat, which is what a government sponsors, and then there's what people in customary practice will accept. And historically, that was everything from gold to, in the United States, even wooden tokens, wooden nickels. When the internet came along, people began to look at that and say, whoa, there may be an opportunity here. So as early as 1982, 83, people started coming up with this idea of digital money. But they had a basic problem, which was something called double spend. And nobody quite figured out, well, it's one thing if you create it, but who knows if Hollis sends it to Steve if he hasn't sent it to 10 other people. In 2008, a paper was written by a guy named Satoshi Nakamoto, which took a bunch of concepts that are already floating around, put them all together in a white paper, and he created the concept of Bitcoin using something called digital ledger or blockchain. And that actually was the beginning of what we now think of as Bitcoin, which is a digital instrument or cryptocurrency, crypto token that by using the blockchain can only be spent once. And it's basically a computer algorithm. And that the paper came out originally he created a website in 2008, paper in 2009, and created the Genesis block then, and then introduced it to the public. And so it's the first digital instrument. It's the original Brontosaurus diplodocus in the cryptocurrency world.
Okay, so who's running all of this? I mean, the creator is kind of a mythical person. There is no person that actually did it. It's a nom de plume. Nobody really knows who he is. There's been a lot of speculation, but who's kind of overseeing this? Because typically, as you said, fiat or currency is typically mined or produced by a government, printed, or it's and it's controlled. The supply is controlled. How does Bitcoin work?
Well, mechanically, after the original mathematical software algorithm was created and published, a group of individuals helped refine it, and there actually is a Bitcoin Foundation. But the big idea behind this is decentralization. And right now in the crypto world, there's a big fight between the various Bitcoins. And by the way, some people think there are about 23,000 of them out there, and some other sources have it in the millions. But for Bitcoin, it's considered decentralized because there really isn't a single individual or a single corporation in control. It's really a group of participants, all of whom feel some degree of ownership in it. And we're talking about literally now into the millions, but it's decentralized. There isn't somebody you go to, which is a big issue.
Well, but it is computerized. It is controlled by software. And price is a function of supply and demand. So we'll get to the demand side in a minute, but who controls the supply? What you're saying is there are these producers who mine it or produce the supply, but there has to be a control of the total quantity. How is that governed?
Well, the original software algorithm that was published fixed the number at 21 million. And the concept was when the first Genesis block was created in January 2010, is that all of these people with computers, referred to as nodes, would be running these software algorithms, and whoever finished the algorithm first each time, and there's a sequence to it, would receive a Bitcoin, but the maximum number that will ever be minted will be 21 million per the software. And that's caused all sorts of arguments that it's too few. Other people like the idea, and one of the concepts of stored value has been that it is fixed, but after 21 million have been minted, there theoretically should be no more Bitcoins because of the software algorithm locks it in.
And we're not there yet, but we're coming close to having that number fully produced and in circulation. But what you're saying is, unlike a government, which can print money forever, or unlimited supplies, essentially, this is going to be fixed. And once they hit 21 million, it's done. And so therefore the value will float, but against a fixed supply.
Exactly.
Okay.
Exactly.
So then when that happens, what drives the price per Bitcoin?
Well, absolutely the market, purely the market.
So supply and demand. So people.
The key thing with Bitcoin in particular is there's very limited commercial use today. There is anecdotal activity. El Salvador has set up a small reserve. A number of companies around the world will accept it. But fundamentally, it's a speculative currency. Of the 500,000 transactions every day, 95% of them are purely people trading Bitcoin back and forth with each other.
Okay, so they're not essentially using it as a currency. They're using it as an investment.
Exactly.
Or a trading option.
I call it a brontosaurus or a diplodocus, is because I think we're in an age where the technology will evolve and there will be use for digital currencies in the future more than there is today, although even we do it with a MasterCard, a Visa already, and US Treasury has it, but it's very inefficient. It takes 10 minutes for a transaction to actually begin to evolve. It's a very crude tool today, so it's not very useful for most commercial activity.
Okay, but where is it? I mean, so when you've got a currency, you go to the bank and you can actually put physical currency in and out of the bank, but most of it's digitized anyway. I mean, you get a statement that's got a number on it. But where is this? Where is the supply of this?
Well, physically, it's on the hard drives around the world. It's purely digital, but it's just like any stored document, except this is in a mathematical algorithmic form, sitting on literally thousands and thousands and thousands and thousands of nodes around the world. But it's only in hard drives. It has no physical, tangible form.
Okay, so if I want to buy a Bitcoin, and let's say it costs me $70,000 per coin.
88.
Okay, so I have $88,000 sitting here, and I want to buy it. Where do I go to buy it, and where do I send my money?
Well, right now it's actually become pretty easy. There are exchanges all over the place, and even your friends at Fidelity and BlackRock, they're all anxious to now get your money. So you can buy it. And then the question that you have, that's pretty easy. You can, if you want to buy a small fractional amount of a Bitcoin, you can even use a credit card. There are even ATMs. Now, I've never used one, and I'm not exactly sure of the mechanics, but I am assured that if you go to Dubai, you can go to a Bitcoin ATM. But the key thing then is, Steve, once you buy it, what do you do with it?
Yeah, well, and this is your point, which is it's not really a currency yet because people aren't using them for day-to-day transactions. Although you do hear the sports players who are getting paid in Bitcoin and an occasional, a large transaction or trade, but you're saying it's like you're investing in a commodity like gold or something like that, and where it sits there and you hope it builds value. Now, there are also ETFs that have been created by
There have been.
by these investment houses.
It took a long time, but Gensler finally approved two of the cryptocurrencies, Bitcoin and its competitor Ethereum. Now, Ethereum's fascinating because it's almost the opposite in many ways of Bitcoin. But so there's a Bitcoin ETF that BlackRock has, and Van Eck has, and Fidelity has, and you can go and in fact, there Grayscale and a bunch of other folks. So you can an ETF is a way of playing in that field if you choose to.
Yeah, and that's probably the safer and more common way for normal, up and down the street civilians to play in this, because you don't have because it's tradable, right? I mean, an ETF is traded throughout the day. It's less than a full Bitcoin in value, because you essentially can move money in and out easier and leave the background mechanics to the large banks.
Exactly. And in fact, that really one of the big there've been a variety of challenges mechanically and with the custody, with the holding of it. There have been some very high profile events where people thought they were putting their Bitcoins with Mount Cox was one where you had a big hacking and stealing. People think maybe it was North Koreans. You had the FTX debacle, where people thought their coins were safe. People lose their keys. You need to have a public and a private key if you're holding it. Some people put it in software wallets. Some people actually buy little disk drives called cold wallets that they take off the internet, but then they forget their key and it's gone.
And a key is a very long password, essentially, and if you don't know what the password is, you don't have anything of value if you do it that way. Whereas if you buy an ETF, and I'm not pushing this, our listeners shouldn't misunderstand me. I'm not pushing anything or trying to advocate, but I'm just saying the mechanics of the ETFs then are different because they work just like any investment account.
Yep, it's a far easier, and the hassle factor of having a hexadecimal type of algorithmically produced key is eliminated. You're absolutely right.
Yeah. Now, so there's no guaranteed value. The price is determined by demand, essentially, once the full 21 million Bitcoins are produced. So what market conditions would drive demand and therefore price?
It's spectacularly speculative in the sense that some people on the cynical side that would put Jamie Dimon and Warren Buffett in that camp, would call it the greater fool. People are constantly hoping that there's a greater fool who will buy it for the next higher price. Others on the other side, the pro cryptocurrency side, would argue that that they see it as a stored value. But again, because it has no commercial value, I mean, gold can be converted to jewelry. You can argue that gold has some commercial uses, silver has some commercial uses, but fundamentally, Bitcoin is purely based on because it has no commercial value and no one backing it up. It's a bid offer in terms of what price you get. When Elon Musk pushes cryptocurrency or Trump pushes cryptocurrency, people get enthusiastic. You bring new participants, but fundamentally, it is as speculative as any instrument has ever been.
We're talking about Bitcoin and other cryptocurrencies. We're going to take a short break and we'll be right back.
What does the future of work mean for your employees? How will your company navigate ESG? Will there be a global recession? At the Conference Board, our experts translate the latest research and economic analysis into insights and real-time problem solving for your organization. Membership at the Conference Board provides your team with an assortment of knowledge, from economics, marketing and communications, ESG, public policy, and human capital. As a member, you'll have access to our center experts, member-exclusive events, data and benchmarking tools, and peer sharing that will help you understand the present and shape the future. Consider becoming a Conference Board member today by visiting www.conference-board.org.
Welcome back to C-Suite Perspectives. I'm your host, Steve Odland from the Conference Board, and I'm joined today by Hollis Hart, former president of International Franchise Management at Citi, and he's also a senior fellow at the Conference Board. Okay, so Hollis, we were talking mostly about Bitcoin. You did mention Ethereum, and then there are other cryptocurrencies. You mentioned there may be tens of thousands or even more. Nobody knows for sure, but just talk about some of the top competing cryptocurrencies, how they're similar to Bitcoin and how they're different.
Well, again, in my view, there may be more commercial use in future iterations or generations of the creation of cryptocurrency. And the reason I mention that is what Ethereum is doing. Now, Ethereum's interesting. It trades around $3,000 versus the $88,000 that the Bitcoin trades at right now, today, this moment, as opposed to $93,000 yesterday. But what Ethereum was created by this young Canadian whose family came from Russia named Vitaly Buterin, and he got from Peter Thiel $100,000, Peter Thiel being one of the more interesting Silicon Valley players, money to take an idea that would use blockchain or digital ledger and create a centralized coin. But what they're doing is they're focusing very heavily on how to use the blockchain for smart contracts. And that may turn out, ironically, to be more valuable in the long run than the Ethereum or Ether coin that they have. So that's a really interesting one, because if you think of smart contracts, maybe you want to have your health records under some privacy, but available to you any place in the world, rather than having to go back to an individual hospital. Maybe you want a driver's license. Maybe you want passports to be able to be accessed. It's possible that the smart contract on the Ethereum chain may turn out to have some value. Now, cryptocurrencies fall into the decentralized, which means there's nobody focusing or nobody's in charge, or the centralized, which Ethereum is. But then there's some other variations. There's Tether, which is a stable coin, which is very controversial. It's about 125 billion of outstandings, and that is supposed to be backed by 100% by fiat currencies, mainly the US dollar. There's a lot of questions around whether they've been sufficiently audited or not. I won't speak to that. It may be that there's no risk there. There's lots of risk. I don't know, but the stable coins are an interesting variation. And then there's the public cryptocurrencies and the private cryptocurrencies. Now, with your public cryptocurrencies, such as Bitcoin and Ethereum, you can track transactions. You can see the digital ledger. You and I, with a little work, could actually see, 10 Bitcoin was sent to this address, or 10 Bitcoin was sent to that address. On the private crypto coins like Monero, that gets hidden. And so those transactions become even less trackable, less visible. And that's a small segment of the world, but it is another variation on the crypto. So you have the highly visible Ethereum, XRP, Solana, And of course, the one we have to talk about is Dogecoin. And the reason Dogecoin has to be talked about is it started out as a joke, absolute joke. But Elon Musk decided that it was fun. And I think the fact that it looks almost like Doggy Coin as opposed to Dogecoin enchanted him. And so as a consequence, he has constantly talked that up, even though it has a smaller use, but because it's a meme coin particularly, it gets a lot of attention.
So, it's interesting because, this thing started as a quote unquote currency, something to be used. You're saying that because there's limited ways to use it, it's mostly become a speculative vehicle. But you also mentioned blockchain and other forms of management. So blockchain, everybody's heard about blockchain, but blockchain is simply the software. I'm going to oversimplify it. The software means to control the supply chain of Bitcoin. And so, because if it's going to be out there in the internet, you have to have controls, or how do you do it, how do you process it, how do you quote unquote mine it, or or produce the supply, and who's going to how do these ledgers work. Well, all that was managed through blockchain, and there's been a lot of discussion about whether that the blockchain or these tools to manage the supply and the trading are actually more valuable and have more application than simply their original intent.
Yeah, and as a recording ledger, there has been a view that perhaps, again, not this generation of technology, but a improved generation, the next iterations. You go from the Model T to the Model A, you keep moving up the chain in terms of getting better and better technology, that there are opportunities. JP Morgan spent a great deal of money looking to see how much of their trading could be moved to the blockchain as a recording device, and getting rid of a lot of intermediate bureaucracy, and increasing efficiency. So the digital ledger technology as a recording device, the world's most sophisticated spreadsheet, is looked to be as something that could be very valuable. I think so far most people have found that it's still inefficient, but I think you're absolutely right that it could be the core, the kernel for creating some much more efficient global technology.
Yeah, and a lot of work needs to be done there. And of course, regulators around the world would have to be bought in on this to make sure that it's safe and so forth. The current SEC is not very keen on any of this, to be honest. But who knows? I mean, as people get more comfortable with it and it's proven, it could be there. But let's come back to the fundamental question. Why would anyone want to invest in something that doesn't really exist except in ones and zeros, something that is not controlled or backed up by a government, something that is entirely speculative, whose price is unknown day to day? Why would they want to invest in that versus any of the other options like stocks and bonds, which have real businesses behind them and cash flows that you can see and touch and manage? Other currencies or commodities, which are probably more akin. I don't get it. Why?
Well, and you're asking a question that a lot of people ask, and I think they could come to the conclusion that they want to stay on the sidelines. My sense is there are probably 3 or 4 different principal groups. There is a group that believes that fiat governments are irresponsible, that you look at the US fiscal deficit, which where now we spend more money supporting paying the debt than we do on our military. If that number that I heard is correct, I haven't validated it. And people say, this is a stable, it won't be interfered with by the government. And those libertarian biases or views see this as an alternative. And that's a strongly held view by a not trivial number of people. There's a secondary group that does see commercial opportunity in the future and believes that at some point in time, there will be more adoption, there will be more improvement in technology, that there will be more opportunity. And because Bitcoin is so big, the Brontosaurus diplodocus of the Jurassic crypto era, they say it's going to be the survivor among the 23,000 cryptocurrencies, that the rest will disappear. There's the third group that is your, I'm smarter than you are. I'll get the musical chair before the music stops. And they believe that they can be just the smartest person in the room and won't be left holding an empty bag. All three of those are believe very deeply in their particular view. The libertarian, the commercial group, and the smart speculator group all are major participants. There's a tiny group that probably has other views, but you look at it, at one point, Musk again was willing to sell Teslas for Bitcoin. He backed off of that when he had so much pushback. El Salvador looked like they had made a disastrous decision when they were buying at 60,000. It dropped to 40,000, and as a reserve currency for the country. And now at 88,000, El Salvador looks pretty smart.
So what you're saying is that these people view government-issued currencies as diplodocic in a way.
No, they view the government as subject to the failure. I'm the one that thinks of them as diplodocic, but they just feel that that because global governments have spent so much money and are running such large deficits, that their currencies will be devalued as other currencies have been historically, and that the cryptocurrencies, the Bitcoins, will be the survivor among that.
I just know that you wanted to use 4-syllable words in this because Yaleys do that whenever they can. So diplodocic is your word of the day, folks, and it just means it's an extinct genus of dinosaur. You know, the other thing that you haven't mentioned, which unfortunately is a use of Bitcoin, is in black markets, the dark web, and you know, transactions where they don't want any banks involved, governments involved, or any tracking involved.
I might even back up just slightly from that, Steve, because you're touching on an absolutely critical question, which is how do governments and legal authorities feel about having alternative forms of currency taking place in their markets? And that's a big issue. The monetary system is one of the real sacred bloodlines for countries and for regulators and governments. And so there's a lot of concern about that to start with at the highest level. As you probably know, China and another dozen countries or so have actually outlawed Bitcoin and Bitcoin mining. There are two issues on that, of course. There is the control and the risk, and there's also the environmental, which we haven't touched on. People are very concerned that the massive amount, and we're talking massive amount of energy that gets burned up through the millions and millions and millions of computers, very sophisticated computers generating 24 hours a day, churning away to create these things. The other part of your question, besides the concern that governments may outlaw cryptocurrencies or put such controls over them that it'll make them very inefficient, even less efficient, is the fact that it is one of the tools that are available to people either that want to do illicit activity that we think of as drug smuggling, trafficking, terrorism being a very big concern, of course, and then those that are in countries where there is no ability to move capital out of the country, the North Koreas, or a country that has put limits on its money transfers, so Venezuela's of the world. And therefore, this becomes one of the safer tools for the bad guys. It probably is not used in sheer volume as much as it gets the publicity, but it's absolutely there. We're talking in the hundreds of millions of dollars.
Well, and the other thing is that these unregulated currency markets, or trade that doesn't use government, is not able to be taxed by definition because it goes below
And
the
that's,
radar.
yep,
And governments don't
that's-
like it for that reason as well.
absolutely. Tax avoidance hurts the feelings of any government.
Yeah, it certainly does. Hollis Hart, thank you for joining us today and explaining this really complicated subject, but I think hopefully we made this easier for our listeners to understand, despite the 4-syllable words.
Steve, I'm honored to be invited. Thank you very much.
And thanks to all of you for listening to C-Suite Perspectives. I'm Steve Odland, and this series has been brought to you by the Conference Board.
You have been listening to C-Suite Perspectives, a podcast by the Conference Board.